Well, they shorted, so is it time to pump it? Well, let's call Pepe our pumper over here to see if it could happen. That's what we're going to talk about on today's Stock Market Brief, amongst a lot of other things, giving an overall view on the markets, gamma levels. We're going to go into individual stock tickers and then also talk about what's been going on over there in China as well. All that and more on today's Stock Market Brief show, where we navigate the financial markets through the lens of a technical and financial market analysis. If you haven't done so already, make sure to hit that thumbs up. It is greatly appreciated. Let's get into it. All right, people, welcome back. Check the pinned comments or the description below to download today's chart deck for free. And there's also a link to our Patreon community. I'm not going to go too much into detail other than it's $9 a month and we give all kinds of cool stuff within it so you can pay annually and save money. So we're going to go ahead and start today off with Fed Bostic. He urged the caution on rate cuts. Go figure, right? That's what the Fed's been saying. We'll see if that holds true. Okay, he's looking for evidence inflation still on track for 2%, he says, but he also had mentioned that he sees rate cuts in the third quarter of the year. So if you take a look at the Fed Watch tool looking into March, it's more of a coin flip now. We're at about 55% probability of a rate cut and a 42% probability of staying the same. So one thing's for sure, it sure seems like the rate hike cycle is over, but now the market's really trying to price in either the cuts or the pause, the continuation of the pause, I should say. Today, if we look at the 11 sectors that make up the S&P 500, technology led the way. Apple had a big day today. Everything was up on the day. NASDAQ composite was up a whopping 1.35%, and the NASDAQ 100 down there at 1.47%. Closing at a new all-time high over there. Pretty awesome. And if you look at the S&P 500 30-minute time frame, we are above that 5-day moving average. But one thing is clear as day. We're not too far from the all-time high, which we've been talking about. I feel like that's going to be a print of eventually here, right? So we can get the headlines out. We had this little island reversal pattern. Came up, we pulled back, and then we moved a little higher. But where does that put us for the week? Right in the middle of the weekly expected moves. Yes, we tagged around and played around with it just the other trading day. But as it stands right now, from a week-to-date basis, we remain unchanged. Now, we had a good day today, but it was interesting to see that the 10-year yield was up and the dollar was up too. So who's lying here? Is the dollar going to start coming off and, coming off a little bit or breathing, and that's going to help propel the markets further? And is the 10-year yield, is it going to take a pause, up in and around these levels? Because we aren't too far from prior resistance. If I just drew a line out like so, here we go, prior resistance. You can see prior resistance, we gapped above it, we closed below it, we came back up, and so forth. So right around in this area can potentially act as an area of resistance. Now, we called out this bullish crossover, and since then, the yield has been moving up higher. Still, the price momentum oscillator still below zero. Okay, so the yield's up, the dollar up. That typically means markets down, but today we did not see that. So it'll be interesting to see how that plays out going forward. If you take a look at the total assets, the Fed balance sheet did continue to tighten. You can see we saw a little uptick the prior week. Today, we went a little bit lower. But if you take a look at the reserve balances, this is still adding to that, more liquidity coming in, which is clearly helping drive the market in this short-term correlation. You can see as we're removing the reserve balances when it was draining liquidity. And then all of a sudden around this SVB blow up, we saw a big spike. It started to continue up and we started moving a little bit higher. And that also goes inside along with the bank term funding program, which is set to end in March, I believe it is. But as soon as we started to sell the SVB and they started the bank term funding program, just take a look here. As the market was really going sideways, that really set us off on this strong move. Started kind of just going sideways. We pulled down and then we started to see more liquidity come in right there with the bank term funding program, which apparently, this correlation may very well break. I don't know if, this is helping with the S&P 500 or not, but the correlation is pretty strong. So that's why I'm continuing to watch it. And I feel like there's some smarter people that said that there's an arbitrage going on right now. And that's why we're seeing that, uptick there in the bank term funding program. Going into tomorrow, we do have Michigan consumer sentiment just 30 minutes after the market opens up. So be aware of that if you are trading intraday. And we have some more Fed speech daily and bar. Okay, so this was the chart that was on my original slide there with a little meme on it. And there is a concern here, but there's also a potential opportunity. The concern is we're looking at XVG, which is equal weight. Okay, and then the S&P 500 beneath us. And you can see equal weight. So many of the stocks have been actually falling this year, okay? But there are a few names bringing the S&P 500 up. large market cap names. For example, Nvidia, Microsoft. So some of the big dogs that have been catching a bid have been really helping this market out. So this has been going down, this has been going up, and we've seen this time and time again where you get these negative divergences and then the market follows suit if the divergence plays out. We saw a bigger one here, the divergence played out. But there's also a potential opportunity because price is starting to coil up and wedge and we're above a rising 20-day. So this could very well bounce from this point, which opens the door to potential multiple different names bouncing. And a lot of those names could be coming from, more shorted type inventories. Now, if we take a look at IWM, you can see that's a very similar chart to equal weight. If we go back to IWM, this thing has been kind of wedging here as it stands. I've been looking at this wedge for quite some time. Then we broke down and we came back up a little bit. Could be a potential little flush there. But if I mark from this October low over here, or this October, I don't know if this was the low, but from when this really big rally started, you can see price started taking off. We pulled back into it. So I anchored another VWAP before this big gap up and price has held that area. You can see we got under it and now we're kind of holding it and we're still below the anchor VWAP from here and the year to date anchored VWAP. So it's kind of pinching, getting closer, and this potentially could be an opportunity to play the breakout and go retest these prior highs in the Russell if we're going to start catching a bid. Now, if we're not, then watch for a break below, and break below, more specifically that 185 level, would be a little bit more dangerous. Another thing to pay attention to here is when we take a look at, this was posted by The Marketeer, you can see meme stocks, as we brought up the meme earlier today about the Pepe, these have been getting absolutely crushed. And this right next to it is the most shorted names. This has been getting crushed. And when things, are heavily shorted and they fall substantially, well, eventually they're going to look to cover. And when they look to cover, that's where you can get those short squeezes. And these are really diverging from the NASDAQ. Okay, so the NASDAQ, you can see there's been a tight correlation between the two, but in a recent trade this year mainly, you can see the NASDAQ's moving higher and the memes are diverging as well as the most shorted names. So we're going to look at some of those names right now, kind of see how the price action looks and just be aware, because if they do get squeezed, it could create potential opportunities. But you got to, once again, I want to preface this with saying you got to be very careful because, these are catching falling knives. So you got to be very tactical. But take a look at Lucid, LCID, the once beloved Lucid. But this thing has not had a red or not a green candle all year. That's pretty wild. It's down 40% or so. And we've just been falling, nosediving like a rock. It's at around 2.55. It's 265 right now, and that was down 4.68% today. This is a heavily shorted name, and the thing is, where are people going to look to potentially cover? And if they start to cover, how much of a squeeze can we potentially get? So maybe have that on the radar. Rivian is another name, right? Also the beloved, EV names, right? Even Tesla has been having a horrible start to this year too. They all look the same. So maybe if Tesla starts bouncing, we'll get Rivian to move, maybe Lucid to move. We started the year out with a big gap down, follow through, and then we've been following through. And today, maybe perhaps we're moving into, capitulation type of move right here. It's down 6% on the day. We saw some more stronger volume there as well. Plug Power, just take a look at this big hit, right? Heavily shorted names are down 46% on the year. Today, right? Potential capitulation as volume really started upticking. But remember, these are like catching falling knives. So be very careful here. But like I said, where are they going to potentially look to cover? And that could potentially create opportunities to bounce in the near term. Take a look at Spirit Airlines. I don't know I know that this has a decent short interest. I don't know which one. And there's this big drop is really from the news that's been going on. So I'm not going to touch too much into that, but just look at this, 65% down on the year. It got completely obliterated. We saw, I was talking about it over here, who's going to save. And then we saw this nice bounce. And then this year it's just got absolutely just crushed from that. I think this, the pause on the merger, something like that. Mobileye, this is not a U.S. traded name. I believe this one's traded out of Israel, is an Israel equity. And this one started the year off with a huge gap down, pretty much down, huge gap down. We have earnings coming up, but also a heavily shorted name. All right, heavily shorted name. So when it looks to cover, we might see a pretty strong bounce. So it's another one to just pay attention to. Stuff like this, like Carvana, right? We saw this strong move. We were actually prepared. If you look back actually in my videos, I think it was right here on this day, we started pointing out a lot of high short interest names. So go back to these days and you can see I listed out so many different names. And what you'll see here is price got really coiled up and tight. And then we got that squeeze to the upside. A lot of these names ran just incredible runs. But as it stands right now, the price action is pulling down in a pretty tight wedge. So if we are going to get a potential, some short coverings and a little bit of a squeeze, these could be names to watch. So Carvana, same with Unity Software, very similar type look, right? We've got this really strong wedge like so, with earnings not too far around the corner. Upstart, another one. Upstart is also getting very, very, very coiled up right here, and it's just horrible on the year, down 23.4%. And then Rocket Mortgage, this is another one that we called out. I think this was actually a trade idea that I called out. And I can't remember if it was this flag or this flag that I think it was this second flag that I pointed out. And this thing just took off like, a rocket. And now we're seeing a pretty strong move, but it's also, decently shorted and it's kind of wedging here. So if we potentially get a bounce here in the near future, it could create opportunities there as well. Let's take a look at a couple of signal charts. We're still in the summation index where the parabolic SAR is above it, still pointing down, but the NYSE McClellan oscillator, it's a little fried here. Typically when it gets down to minus 250, minus 300 is where we can see bounces. If you take a look at the summation index for the NASDAQ, this is also still pointing around, identifying a potential change in trend. So we'd want to see this fish hook up, parabolic SAR go underneath it. And we did get pretty extended there on the NASDAQ McClellan oscillator too, which creates sometimes bounces. And that's what we saw today. Now, I want to show copper. This one's interesting to me because there's interesting correlations between the US markets like S&P 500 and also the Hang Seng index. And what I've noticed here is when copper makes, lower highs and the S&P 500 makes higher highs, it could potentially mean a turning point or a divergence that's building and play out to the downside in the near future. And we've called that out here, all of these red lines where we had the S&P 500 move up higher, but copper wasn't matching it, right? S&P 500 moved up higher, copper was not participating. And same thing right here where copper's been coming down, but yet the S&P 500 has been kind of just going sideways. So this says to me, hey, potentially we might get caught to the downside, or this is an opportunity. And the opportunity that I'm talking about here is if you just look at the price action absolute perspective in copper, we did have a small body candle today. So it could identify a potential change in trend if we get back above that 376, and we could potentially get a bounce. And that could be good for various markets. And one that I thought that was interesting was looking at like the Hang Seng index. So if you look at the Chinese stock market, and you put a correlation on it, you'll see a 20-day correlation. Most of the time, it's above this zero line, which means that there's typically a positive correlation between copper and the Hang Seng index. And there's really no surprise there, right? They call this, Dr. Copper, the PhD on the economy, right? And, China market is one of the biggest global markets, and I think they're the biggest importer or export. I can't remember quite off the top of my head of copper. So the correlation kind of makes sense here to me. But if copper does start catching a bid, perhaps that might offer opportunity in various Chinese stocks. And a very interesting chart here is looking at China Technology ETF, which is in the red. Looks just like the Hang Seng index, basically falling flat on its face. And then you look at Qs. And also, if you look at a correlation between those two assets, dating back to 2019, I could have went further, but it spends a lot of its time in a positive correlated state. However, just take a look here in 2023 and 2020 into 2024. The U.S. market, right, the Qs have been going pretty much completely vertical, while the Chinese tech has been telling us a completely different story. So, my thought here is, hey, there could be potential opportunities here in the near future. It doesn't mean you got to enter in right now. You typically want to wait for basis to form and see if anything good comes from it. Or this could be, a complete warning sign saying that this large economy is giving us insights into what may follow in the near future with ours. So, or with the United States, I should say. We have people all around the world watching this probably. So. But I did find that interesting. So if copper bounces, perhaps maybe that gives us an opportunity in various Chinese names there too, China equities there too as well. So if we take a look at SPY on the daily time frame, there's a little channel that I want you all to pay attention to right here. We have a low, another low, and then we had this low right here where it got under the year-to-date anchored VWAP, and we started bouncing from that level. So we're above year-to-date anchored VWAP, and that to me is a good bullish sign that tells us that buyers are in charge. We are positive on the year, and we're above that year-to-date anchored VWAP. So if we do start moving up higher, look at the all-time high. It seems like it's in striking distance, but then potentially coming into the upper portion of that channel. Now, if we start breaking down from the year-to-date and start breaking down from here, I'm watching this anchor VWAP from this October low before we got this really strong move. And that would be the area of interest that I'd want to pay attention to. Here are some gamma levels going into tomorrow. Remember, we've been talking about gamma running off and the 4,800. We've been pinned there, right? We came up, we pushed away, came up, pushed away. We started breaking from it, getting into negative gamma territory, but we started moving back into that area. So going into tomorrow, local support is at about 47.75. Local resistance at still 4,800, but this pin looks to get potentially pulled going into the end of tomorrow's trading session or tomorrow's trading session. So it'll be one to watch, and just be aware of, as I stated, option expiration. We're having since the beginning of the week, we'll probably have about 50% or more of the gamma expired. Okay. So if we take a look at the SPY on the daily time frame, not only are we in positive gamma territory on the SPX, so that's positive, we are back above a 5-day moving average. However, it is neutral, so I don't really consider that bearish or bullish, but it is above it, so that's a positive sign. Or above the week to date anchored VWAP, but remember, we're pretty much unchanged on the week. Full open door to either weekly expected move. It's pretty rare to see the lower one tagged and then the upper one tagged in the same week, but it has happened. And then we're above that year-to-date anchored VWAP. Take a look how that worked. So we gapped down from it. We came up, we retested it, boom, we closed right at it. And this is what the market did. The market gapped us right back up. We retested it out today, and we pushed back a little bit further. Actually, right over here was the upper daily expected move, and we started pushing from that level, and then we tested the year-to-date, and then we broke through it, basically going for that 2 standard deviation move on the daily expected move, daily risk range, we can call it. So if you look at the upper daily expected move going into tomorrow is 479.34. Down beneath us is 473.64. Like I said, you can download this chart deck, and if you take a look at the Qs, we'll finish off there. They had that all year-to-date all-time closing high today. And you can see we had a nice gap up, we pulled back, and we closed at around the high. So a lot of volatility intraday, and we started the day with a pretty strong gap up. Now, the 5-day moving average is inclining. So what do we say if we get below it while it's inclining? We say it's bearish, but with caution, right? And if we're in a positive gamma territory, that's more of a bullish sign. Well, we came down, tested the year-to-date anchor VWAP, and we got right back above both of those levels, and we still are close. We're not too far off of the upper weekly expected move here, but earlier this week we did tag the lower weekly expected move with pretty much precision in confluence with the year-to-date anchored VWAP, and so far now we are up on the week there. So if you are going into tomorrow bullish for the NASDAQ, I'd say look up here to the upper weekly expected move, upper daily expected move. And then if we are going to get a potential move in the IWM, look to see all these different various high short interest names, potentially to look for some covering to take place where you can start seeing big moves there. Just be very careful with these. These aren't YOLO type names. You want to be, like I said, once again, very careful. That's all I got for you on today's show, everybody. See you later.